FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 3/19/20. Well, I don't know if I shared this with you, but I was seriously considering changing the name of the show because we started in the aftermath of the Great Recession, the financial collapse that took place in 08, 09, really through 11. And I felt like the name of the show just wasn't relevant. And then what happens? We get the Wuhan coronavirus, and all of a sudden, it's all about financial survival. We probably have the beginnings of a massive recession, if not another Great Depression. Almost certainly, you can't just stop global economic activity for 90 days and expect that nothing is going to happen. And then, well, I stumble upon a guest, his name, Scott McLean. He's got a new book. It's called 3 Blind Mice and How Today's Financial Planning Process Leads Your Money to a Mousetrap. And also a radio host, a fellow radio host, Financial Insanity. And we are thrilled to have you on, Scott. So the book, it's not out yet. Obviously, it'll be out in about a month.
Actually, it's out right now.
Oh,
we just got it early.
Oh,
and
you're a month early.
Thank you for letting me join your show. We are having a blast in this crazy time. I don't know about your area, but nobody's allowed to go to the restaurants anymore. They're shutting that deal down, and things are in Florida. It's not that bad, but up here, it's almost like a deer in headlights. Yeah. People not sure what to do, but they cannot not do anything when it comes to their money. They've got to take action.
And so Financial Insanity, that's exactly what's taking place. Now, look, all of this was very predictable. If it wasn't the Wuhan coronavirus, it was going to be something else that was going to pop this balloon, because you can only take so much money from the Federal Reserve till malinvestment, bad risks, over speculation takes place, and then the market is going to take care of it, right?
Yeah. It's amazing. You look at the stock market now, we're back to a lovely period in time, which is right here in May 21st, 2017. That's where all the gains have been wiped away from May 21st, 2017 to now. The markets has had a terrible, terrible challenge. If they're not invested correctly and if they're not allocated correctly, and of course, if they're not aware. And that's why we talk about in my book, The 3 Blind Mice, how today's financial planning process leads your money to a mousetrap, because these guys in my world, and I'm sure in your world, they don't talk to each other, the accountant, the advisor, and the lawyer, leading people to a slaughterhouse like the market today.
And so what we've seen in the past, Scott, and certainly for the last 30 years, I think you can go back to 82. So it's almost 40 years that this global bull market in stocks took place, with a number of blips on the downside. We had 87, 91, 92, and then, of course, 8 and 9, 08 and 9. But it's always come back. Is it going to be different this time?
You know, I thought about that in some of my workshops and my radio show. I talk about the history of the stock market. And if you and your clients, obviously, I know you believe history has a way of repeating itself more often than not, here's the challenge. I went back to 1899 and I did a study. And from 1899 to 1921, the market went nowhere. Then from 1921, in my book, I talk about it, it soared till, of course, 1929. But here's the key people aren't really paying attention, is the price to earnings ratio. When the price to earnings ratio on the Shiller ratio shows around 30, that means you better get out of the way. In other words, don't hit the gas when it turns red. And yet people want to hit the gas because everything will look wonderful. And when everything looks wonderful, everybody loves each other when the markets are up and you're making money. But everybody sticks their head in the sand like an ostrich when the market drops and they don't want to pay attention. So they get like a deer in the headlights. They do nothing. This is the time to do something and to pay attention. The Shiller PE ratio shows the drop in 29, the drop in 1966 to 82, no growth. And I guess the fastest growth in the market was 1982 to 2000. From the year 2000, everybody thinks the market's screaming. When I did my studies, which I do all the time because like you, we love our clients. We really want to love our clients. But if you look at the return, I think you can agree with me. If you go back right to a small year, just a couple of weeks ago, we called them to the year 2000. From the year 2000 to now, the stock market to right now, in other words, a long time, the stock market is amazing as it's only up. It gave up a lot of the gains, as you know. But from 2000 to now, the market's up 96% from the year 2000. You know what that means? What's 96 divided by what?
That
20
is,
years?
4.8? Yeah, it's nothing. Yeah, 4.8.
For
well, it's not nothing.
That stomach ache and Pepto-Bismol and risk. And people can avoid that for people like yourself by guiding them what to do and how to help them. And the Shiller talked about that, and history has a way of repeating itself. I'll agree with you, Terry. We could be in for another real left hook.
Yeah, definitely. So 4.8%, you could have bought the worst performing insurance policy, accrued those profits. And I'm not advocating insurance, because for most people, it might not make sense. But as part of a portfolio, most of the insurance contracts yielding 5% risk-free, and with dividend reinvestment and expanding your coverage, you could have gotten up to 7 and 8% on insurance policies, certain ones, and you only had to go with the AAA rated companies, the ones that are really secure. You didn't have to go with risky insurance companies. But when you look at that 20-year period, how many life insurance companies collapsed, as opposed to how many companies went bankrupt during the same period, whether they're tech companies or industrials? It's a fraction. I mean, hardly any. Oh,
forget about it.
Hardly
any. And they get bought up by each other, though. They buy each other up to protect each other. So pretty much, they are pretty much managing it a whole lot better than the government does. I can promise you that. Mm-hmm. And other companies, as you know, Mutual of New York, they had a challenge. Big company. When Daddy passed away, he had one. But it was, of course, taken over by 5 or 6 other companies. They bought their book of business, keeping the name out there, but protecting it. So I agree with you. Mm-hmm. Insurance is a great tool. Go back to 2000. The Treasury was 6.5. No risk. Mm-hmm. Now you jump into a great and good insurance company, pays nice, juicy dividends. You have the protection, you've got the dividends, and you can sleep well at night. When you put your head on the pillow and we see a disaster that we're seeing right now, it sure is nice to sleep well at night without Pepto-Bismol when you go to bed.
Yeah, and the coronavirus, as bad as it might be, is probably not going to have any impact on the profits of life insurance companies.
Right. I agree with you. I think there's some really good tools. There's a lot of good tools in the tool shed, and you said it very well. And if your clients and your people that you talk to every day, they need to take their head out of sand, talk to you. Give them some guidance, and because a lot of people are afraid, and this is not the time to tuck tail and run at all.
Yeah, fear is the enemy here, for sure.
It is.
And it's very easy to get into a fear-based kind of mentality, isn't it?
Yeah, it is. Now, you're down in Florida, is that right?
Yeah, correct.
Well, you guys can go to restaurants, can't you? We can't. They stopped all our restaurants. They stopped us going out. I mean, can you go to restaurants down there?
Yeah, I was at one last night, and they didn't seem to have an issue.
Imagine you can't go to a restaurant, which is probably good for my waistline. But imagine the fear that we're facing up here in New Jersey and New York. And then, of course, right across the border, Pennsylvania, to do whatever they want. I think the calls they're making are good. We have to protect ourselves from getting sick. But if you're around a lot of senior citizens, A, they want to feel good. B, they want to protect their money. And C, they want to sleep well at night. And this is the time they need somebody like you.
Mm-hmm. Yeah, couldn't agree more. It's a bit scary out there, but it's nothing we haven't been through. So you think we're going to get another slam on this market, huh?
FSN Radio. It's all about what's next.
Silver One Resources is an exploration and development company backed by strategic investors Eric Sprott and SSR Mining. At Silver One's Candelaria Mine project in Nevada, there is already a historic resource estimated at 127 million ounces of silver, which Silver One is developing and advancing. The company's Phoenix Silver project, located within the Arizona Silver Belt, is an early-stage exploration project on which native silver vein fragments have been discovered near surface. One grab sample assayed an astounding 14,688 ounces per ton. Yes, that's right, ounces, not grams. Silver One has tremendous exploration potential, is extremely leveraged to the price of silver, and is cashed up and poised to increase shareholder value. Silver One trades in New York under the ticker SLVRF and in Toronto under the ticker SVE. To learn more, go to silverone.com. That's silverone.com.
The Financial Survival Network. It's all about what's next.
You know, we could get a fake out pop. Based on the Shiller PE ratios, we're due for a third drop. Over the past 200 years, the market shows there's 3 or more drops. We haven't had the third, which means if I were to look at things, the worst case, not even say the worst case, I'm seeing the Dow Jones, and not to scare your listeners and not to think that I'm drinking, because I don't, but I have no doubt we could be looking at 14,000 in the Dow or 11,700 in the S&P. And if you run the numbers as I do, whether you're a technical or a fundamental trader, we haven't had the third drop. And every time there's a drop in the market, this is in my book, the third drop is the worst. And when the third drop happens, it's almost like a woman having a baby. It gets worse, 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 and the birth pangs happen, and bang, out of the blue, just like we've just seen the past couple days, or I should say weeks, which was, I guess, January 5th, it started being a bump in the road. People need to really, really get some good advice. Like I talk in my book, Three Blind Mice, people like yourself who work with the accountants, lawyers, and financial advisors, they need to work as a team. And I think this is a great time for people to really not, put things aside, but take action. Even if it's on the phone. My clients are calling in, Scotty, how we doing? We're doing unbelievable. The market's down 32%, and your account's right around 11. We're good to go. And so I think this is important. I think you tell your clients all the time, I'm sure.
Yeah, well, anyone listening to the show knows our feeling. This was an inevitability. I feel like I knew it back then, but it's even more clear now. The repo crisis was really the tip-off of what was to follow. Yeah. It really was.
We're seeing the bond market really, Johnny, go negative rates. The good thing, there's always a good and positive. And I think, how do you talk to people? And I think I'm trying to not make light of it. I'm concerned. But if you look at the reversing, is the negative interest rates, which are around the world, we could be heading there for sure. But the good thing is we pay our debt. We pay our debt back quicker. I'm trying to think any positive thing about it.
Yeah, right. That's right. Very true.
And people are going to keep borrowing from the United States because we're the cleanest shirt in the dirty hamper.
Yeah, I call us the Taj Mahal of Baltimore.
Yeah, I'm going to use that. Can I use that? I love
just
it.
Just a tribute. Just give me credit. You can use anything I say, but it's the truth, right? I mean, it's really just a bad situation. Now, when you shut down the global economy for 3 months, which is the minimum it's going to be here, the effects are going to be disastrous, aren't they?
It will. There's going to be so we could see the bottom line growth of products and services being sold, but the top line, nothing's happening. And when you look at top line growth versus bottom line growth, there's going to be a repercussion. And just like you said, the repercussion is going to be not a good day. I'm just thinking of all the people in restaurant business who may not get a paycheck, or I have a house there in Ocala, as I mentioned, in the horse country, and they have big competitions, World Equestrian Center and HITS.
That's gone.
My daughter competes all over the world in riding, and it's amazing when I see they shut down shows and they're shut down basketball and everything. It's like, this is going to really have a snafu. And if you want to sleep well at night, they need to get a hold of you and take care. I mean, I'm sure you got a great practice down there. They need to get help.
Oh, yeah. No question about it. So we deal with solutions here. What is the solution? Get out while you still can get out of the market?
That's and I meet with people on a daily basis. I've been doing this thing since 1982. I've been doing this thing for a couple of weeks. Mm-hmm. And since 82, we see cycles. And sometimes if you're young, can they withstand it? If they're older, it just depends. If they can handle if they're going to be buying some type of tools, investment tools, they need to understand the good, the bad, and the ugly of each one of those tools out there. Let's say it's an insurance tool, a type of company. Is it time to get out completely? Do you want to write it back up? In time, depending what your age is, it could come back. The definition of is when.
Yes.
So if I look at 1929, it didn't come back until 1954. If I look at 1966, I'm 61. From 1966 to 1982, the market went nowhere. It was flat. It went up, it went down, it went up, went down. By the end of the day, it went nowhere. Yeah. And this is the third trial from the year 2000 to now. As I mentioned at the beginning of your show, at 4.8% for all that risk. I mean, everybody wants to make money. I talk about show Financial Insanity. Everybody wants to make money, but no one wants to lose. It's like everybody wants to eat cake and ice cream, but they don't want calories. Well, the same thing is going true now. What do? I'm ready to settle for 4 or 5%. Down there in your beautiful country of Florida, I say, they had a guaranteed 4% bucket, one of the largest companies around. People loved it. You know what? When the market went up the next year, 27%, they wish they had that. Today, I'm getting calls. Thank you, Scott, for protecting my money. Thanks for putting them in the guaranteed safe place. Thanks for helping us. And so that makes me feel good, although I do like 27%. But you know what? If you can't sleep well, your health gets worse. You don't need that.
Yes, that is the truth, isn't it? And that's what you need to be aware of. Anyways, we got to get going. Just to tell us again, Scott, where we find you?
You can look at my book, get it online. You'll see it. It's called 3 Blind Mice Book. 3 Blind Mice Book. You'll see our website there. And if you have veterans, we help veterans with veterans benefits. We do a lot of cool things here. And of course, the 3 Blind Mice talks about, and I'm sure you work with your people, working with the accountant, the lawyer, and the advisor. That team needs to speak together. That's why I call it blind mice. They're not talking together, which could really hurt your clients and their money. So 3blindmicebook.com.
Certainly could. And any questions or comments for either one of us, just email me, kl@kerrylutz.com. The Twitter feed's at Kerry Lutz. Facebook page is Financial Survival Network, and the home site, financialsurvivalnetwork.com. And please like, subscribe, and share, whether you're on YouTube or any other platform. It really helps me a lot when you do that. Scott, can't thank you enough for coming on. Good luck with the book.
Keep up the great work.
All right. We'll talk to you soon.
Thank you, my friend. Take care.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.